SoFi stock has been on a great run over the past 3 months. The stock is up 120% since I made this video back in April saying that SoFi under $10 is an absolute no-brainer. I doubled down on this a few weeks later, highlighting my reasons at $11, and today we sit at a new 52-week high over $20. In fact, the stock is up 220% since I made this video a year ago, where I went through why the stock is such a huge opportunity in the first place and why I was loading up on SoFi stock. But the question right now is, how high can SoFi go? Can SoFi reach a new all-time high in the next few weeks? SoFi's all-time high set in 2021 was $25, and it seems like every day now we are getting closer and closer to that price. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate, parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. In the past couple of days, SoFi announced that they have expanded access to alternative investments to include new private market funds from asset management firms including Cashmere, Fundrise, and Liberty Street Advisors, meaning that investors can gain exposure to multiple private companies across AI, machine learning, space technology, consumer products, healthcare, e-commerce, and financial technology like OpenAI, SpaceX, Epic Games, and more. As it says here, Cashmere invests in a portfolio of high-growth companies to give people access to early and growth stage private companies. Fundrise is the largest direct-to-consumer alternative asset manager in the US, serving over 2 million people, and Liberty Street Advisors is an investment advisor offering opportunities in private markets, helping investors diversify beyond public stocks and bonds. Over the past year, SoFi has expanded its offerings with the introduction of a suite of alternative investment funds managed by the likes of ARK and Franklin Templeton that provide exposure to private credit, real estate, and pre-IPO companies. Additionally, SoFi relaunched its robo-advisor in collaboration with BlackRock, giving members access to portfolios that include alternative assets like real estate and multi-strategy funds. SoFi CEO Anthony Noto stated that our unmatched selection across investment opportunities like private equity, venture, private credit, and real estate give our members the ability to build truly diversified portfolios to reach financial independence and realize their ambitions. While SoFi has also partnered with Templum to give members access to privately held companies, offering exposure to top-tier companies like SpaceX, Databricks, and XAI, as well as Pomona Investment Fund and StepStone Private Markets Fund. Now, there are 2 big things happening this month that will directly affect SoFi stock. First of all, SoFi is set to announce their Q2 earnings report on July 29th. So this is a day to mark on your calendar as this is now less than 3 weeks away. The second thing is that come July 9th, we will have the Fed's July meeting. So we will see if Jay Powell is going to cut rates. Now, there is differing opinions on what is going to happen, with CNBC running the headline that most Fed officials see rate cuts coming, but opinions vary widely, while Reuters are running with Fed minutes show little support for interest rate cuts later this month, citing that only a couple of officials at the Federal Reserve's June 17th meeting said that they felt interest rates could be reduced as soon as this month. Now, the Fed have been holding a wait-and-see position when it comes to rates because inflation is still above the target of 2% and there is still uncertainty around the impact of tariffs. But Fed governors Michelle Bowman and Christopher Waller have gone on record saying that they could see their way to cutting rates as soon as July 29th Fed meeting if inflation stays under control. Now, you might have noticed just now that the July Fed meeting and the SoFi earnings report are going to be on the same day, July 29th. So guys, if you'd like to see me make a SoFi earnings preview video over the next week or so, then smash the like and drop a comment below letting me know that this is something that you want to see. I've been closely following SoFi over the past 2 years, and for anyone that has been following my channel over that period, then you will know that my predictions tend to be spot on. So comment down below if this is what you want to see. If I get 500 likes on this video, that will let me know that there is interest to see this. Now, usually I like to look at the investor's presentation, but today I want to look at this very interesting article. 5 reasons to buy SoFi stock like there's no tomorrow. Now, over the past couple of years, SoFi has been growing at a rapid pace, and its financial services platform is quickly becoming a favorite choice for customers looking for easy-to-use services. But it's only in the past 9 or 10 months that we've seen the stock price start to reflect SoFi's emergence as a major player in the sector. But considering that the company's plan is to become a top 10 financial institution, then it's clear that SoFi is still small and is still just getting started. Despite the stock now at its 52-week high, this could still be a great opportunity, and here is 5 reasons that I will go through very quickly. Number 1, rising memberships. SoFi has been growing its customer base at an increasingly higher rate each quarter. While the year-over-year growth dropped to 34% in Q1, the actual number of new members each quarter is growing, with over 800,000 new members in Q1 alone. Now, just to emphasize this growth, look here at last year's Q3 figures, which was the last time we've seen a full quarterly breakdown of new members. Sure, we can see here that the year-over-year growth percentage figures are going down, but this is because of a higher base number to start with. An increase of 113% in Q1 2021 was just 279,000 new members. But this year, an 800,000 new members equates to just 34% increase. Make no mistake about this, memberships are rising, and they're rising faster than ever. Number 2 is increasing revenue. Now, obviously, more members should equate to more revenue, but there are multiple growth drivers, including lower interest rates, cross-selling, and new members. As it says here, stabilizing interest rates are resulting in a stronger lending segment, which is SoFi's core business. Lending revenue increased 25% year over year, with a 15% increase in contribution profit. There was strength across categories, with loan orientations up 69% for personal loans, 59% for student loans, and 54% for home loans in Q1. While revenue from financial services, which are non-lending services outside of the tech platform, increased 101% over last year in Q1. Contribution profits were up 299%, and contribution margin expanded from 25% up to 49%. These are all amazing growth numbers, which of course then leads on to point number 3, which is climbing profits. SoFi turned the corner into profitability for the first time in 2024, and management is expecting it to keep increasing this year and beyond. Adjusted earnings per share was 6 cents in Q1, and management is guiding for 27 to 28 cents for the full year, up from 15 cents last year, while Wall Street is expecting EPS of 28 cents this year and 46 cents next year. Now, if there's one thing that I've learned from SoFi over the past 2 years, it's that quarter after quarter, whatever expectations they have set, they always tend to achieve a bit more. Lower interest rates will boost SoFi's lending business. Now, we already seen we might not get a rate cut this month, but SoFi is doing great right now, and as long as rates don't go up, which seems incredibly unlikely, then this momentum should continue. Any rate cuts later this year will be a bonus, and next year too. Number 5 is SoFi's ever-expanding platform. SoFi just announced that it will bring back cryptocurrency as a trading option on its platform. It had removed crypto due to regulatory concerns when it got its banking charter in 2023, but now they are planning to offer self-serve global remittances, which are an alternative to wire transfers on the app over a blockchain network. Now, the stock is up this year as investors get more excited about its business, but it has a long growth runway ahead. But guys, what do you think? SoFi's all-time high from 2021 was $25, and we are rapidly approaching this again right now. Will we see a new all-time high before the end of the summer? Let me know your thoughts in the comments below,
and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe, and I'll catch you in the